Popular Canadian tax deductions and credits in 2023. 1. Student loan interest. Interest paid on a student loan is an often overlooked credit. To help students and graduates offset some of the financial burden of repaying student loans, the CRA offers a deduction for qualifying student loan interest payments. You can carry forward any unclaimed student loan interest to any of the next 5 years, so be sure to keep those documents in order. 2. Ontario Trillium Benefit. Ontarians may be eligible for the Ontario Trillium Benefit, OTB. OTB is a refundable tax credit to assist low-income families in paying for energy costs, sales tax, and property taxes. It combines 3 tax credits into one single payment. The Ontario Energy and Property Tax Credit, OEPTC. The Ontario Sales Tax Credit. The Northern Ontario Energy Credit. Your eligibility is based on your family's net income from the previous tax year. Payments of this benefit are issued separately from any income tax refund. 3. Charitable Tax Credit. When you donate to a charity, you can receive tax benefits for your donations. The Charitable Donation Tax Credit is available to anyone who makes a donation to a qualifying donee, i.e. a registered charity. 4. Self-employment expenses. Whether you are fully self-employed, or have a full-time job and earn self-employed income on the side, the CRA allows you to deduct a range of business expenses on your tax return. Depending upon your type of self-employment, your expenses could be a few bucks or thousands of dollars. Regardless of the amount of the expense, it's important to claim all of your business-related expenses on your tax return. In addition to lowering your tax payable, you're also putting together the most accurate picture of your business overall health. The most common expenses for self-employed taxpayers include advertising, vehicle expenses, bank fees, office supplies, inventory, business use of home expenses, cell phone. If you want to estimate the business expenses you can deduct, use our handy free self-employment expenses calculator, and we'll do the math to show you your approximate tax savings. 5. Work from home expenses. A very popular credit that was introduced by the CRA since 2020 after the surge in remote work with the pandemic is the work from home tax credit. CRA allows all employees who work from home to claim up to $500 in employment expenses as a flat rate for tax year 2021, up from $400 last year. You may be able to claim more than the flat rate account if you have the new T2200's Declaration of Conditions of Employment for Working at Home Due to COVID-19, signed by your employer. This form outlines exactly what expenses you can claim, and any reimbursements you've received. 6. Canada Workers Benefit. Canada Workers Benefit, CWB, is a refundable tax credit available for low-income individuals in the workforce. You may qualify for additional payments like the disability supplement. To be eligible, you have to earn no less than $3,000. However, the maximum income level is different in each province. The amount you receive with CWB depends on 2 factors: where you live, and if you are single with no eligible dependents, or have a family. 7. Registered Retirement Savings Plan, RRSP, deduction. Deducting your RRSP contributions reduces your net income, which means you're taxed on a smaller amount of money. To get the most tax savings, you don't need to deduct all your contributions in the same year. Instead, you can deduct just the amount you need to reduce your tax liability, or get the maximum refund. You can then carry forward any undeducted contributions to deduct in later years when you might be making more money. 8. Home Buyer's Amount. The Home Buyer's Amount, HBA, is a non-refundable tax credit. If you or your spouse or common-law partner purchased a qualifying home in Canada in the previous year, you can claim a tax credit of up to $5,000, which will reduce the amount of federal tax you have to pay. The catch is that you have to be a first-time home buyer, which the Canada Revenue Agency, CRA, defines as a person who has not lived in another home owned by you or your partner in the year of acquisition, or in any of the 4 preceding years. For 2022, the federal budget proposes an increase from $5,000 to $10,000. Once approved, the tax credit will be worth $1,500. 9. Gulf Standard Time/Hawaii Standard Time Residential Rental Property Rebate. If you're a landlord who purchased new residential rental property, you may be eligible for the Residential Rental Property Rebate. This rebate may allow you to claim some GST, and/or the federal percentage of HST, on a purchase of a new or substantially renovated housing complex in a residential building. To qualify, the first people to occupy the new residential rental property must be tenants. The first occupants cannot include the landlord. 10. Moving expenses. Did you know that if you relocated more than 40 kilometers for work, you may be eligible to claim your moving expenses? You can claim eligible moving expenses if You moved and established a new home to work or run a business at a new location, or you moved to be a student in full-time attendance in a post-secondary program at a university, college, or other education institution. Eligible expenses include travel costs, fees for replacing your driver's license, and utility hookups. 11. Climate Action Incentive. If you live in Saskatchewan, Manitoba, Ontario, or Alberta, you can claim the Climate Action Incentive, CAI. The CAI helps offset the fuel charge that these four provinces add directly to the cost of your gas, whether it's heating bills or at the gas station. You're only allowed one credit per household, and the amount you receive is based on the size of your family. If you live in BC, you can claim the BC Climate Action Tax Credit, which is issued with your Gulf Standard Time/Hawaii Standard Time tax credit, and helps low-income individuals and families to offset the carbon taxes they pay. 12. Home Accessibility Tax Credit. Renovations that make homes safer or more accessible for seniors or the disabled may qualify for the Home Accessibility Tax Credit, HATC. If you are a senior or hold a valid disability tax certificate, or are supporting a qualifying individual, you can claim up to $10,000 in expenses. For 2022, the federal budget has proposed an increase from $10,000 to $20,000 in eligible expenses once approved. 13. Medical expenses. Medical expenses can add up quickly in the run of a year. Everything from routine dental visits to prescriptions to doctor's fees could earn you a credit at tax time. To get the most out of your claim, it's usually best to have one spouse claim all the medical expenses for the immediate family, you, your spouse, and kids under 18, and any dependents you support. Some overlooked medical expenses include private medical insurance premiums, tutoring for children with disabilities, home renovations that improve mobility or access, travel expenses to seek medical treatment, over 40 kilometers one way, prescription contact lenses or glasses, dentures and dental implants, fertility expenses, in vitro and surrogacy-related expenses and procedures, has an expanded list of eligible expenses, and will be covered under the federal budget, once approved. 14. Canada Child Benefit. Raising a family can be very expensive. With a significant portion of your take-home income being spent on child care, programs or medical expenses, every dollar counts. The Canada Child Benefit, CCB, is a tax-free monthly payment made to eligible families to help with the cost of raising children under 18 years of age. The CCB might include the Child Disability Benefit and any related provincial and territorial programs. Tip: with CRA My Account, you can review dates and payment amounts for benefits programs. You can easily view the status of your benefit payments, tax refunds, and submit documents to the CRA. 15. Child Disability Benefit. The Child Disability Benefit, CDB, is a tax-free monthly payment made to families who care for a child under age 18, with a severe and prolonged impairment in physical or mental functions. To get the Child Disability Benefit, you must be eligible for the Canada Child Benefit. Your child must be eligible for the Disability Tax Credit. Please note, if you are already getting the Canada Child Benefit, CCB, for your child who is eligible for the Disability Tax Credit, DTC, you do not need to apply for the CDB, because you will get it automatically. 16. Child Care Expenses. You can claim tax-deductible child care expenses paid to day nursery schools and daycare centers, caregivers such as nannies and babysitters, overnight boarding schools and camps that provide lodging, day camps and day sports schools. There are limitations on who can claim the expenses. For example, in a two-parent household, only the spouse or common-law partner with the lower net income can claim child care expenses. So make sure to review the requirements before filing your taxes. 17. Canada Caregiver Credit. Do you support a spouse or common-law partner, or a dependent with a physical or mental impairment? If so, the Canada Caregiver Credit, CCC, a non-refundable tax credit, may be available to you. The amount you can claim depends on your relationship to the person for whom you are claiming the CCC, your circumstances, the person's net income, and whether other credits are being claimed for that person. The amounts also change every year. 18. Disability Tax Credit. Designed to offset the extra living costs related to having a disability, the Disability Tax Credit, DTC, is a non-refundable credit used to reduce your taxes owed. In order to qualify for the DTC, you must have a serious and prolonged physical or mental impairment. Depending on the situation, you may be able to claim this credit for yourself, or on behalf of your dependent, spouse or common-law partner. 19. Tuition Tax Credit. As the cost of post-secondary education in Canada continues to climb, every dollar saved becomes increasingly important. That's why students should take advantage of the tuition tax credit. Most tuition fees for Canadian colleges and universities in excess of $100 are eligible for the tuition tax credit, says London, Ontario accountant Chris Follett. However, these must be paid by you or someone from your immediate family. If your employer pays or reimburses you without including that amount in your pay, you can't claim the credit. The same applies if it's your parent's employer.